Morning everyone. Today is Sunday. Video is a bit late because obviously it's a weekend and after a hard week of 5 days I was also taking a day off yesterday, as you could have seen from my Twitter feed. So anyway, let's come back and do some analysis. Obviously today the analysis will not be something like Friday markets because you already have seen that for the last 3-4 days and everybody has got a sense. Rather, what I would do today is give you a sense of context, emphasize a bit more on the first trend change bar, and cover a bit more detail into options selling. So these are the topics for today. I hope it just increases your trading or user experience. So let's start with Bank Nifty, and this is one point I cannot reiterate as much as I speak. So what I'm doing out here is, let's say you're an options buyer and you're looking for kind of high probability trades where the chances of making money is more. You don't want to trade continuously and get taken in by the volatility. So what I would like you to is basically concentrate on the bar where the first trend change occurs. That is, this indicator color from blue turns to yellow, then turns to red. Why I'm saying this is, from blue turns to yellow, then turns to blue. This is not a first trend change. I want the trend change to be bullish to neutral, bullish to neutral to then bearish. Okay, so this was a place where we had a first trend change bar. Let me just increase this a bit. Okay, this is where your, if I just reduce the, sorry, I want to just reduce the point so that you can see the whole bar clearly. Yeah, this is your first trend change bar, this vertical line. This is the bar where you're interested in, correct? Next I want, this is your next trend change bar. We are focusing on options buying for traders who are looking for less trades but more or less sheer short trades, correct? Let's go ahead, sorry. Then let's go ahead and I did show you this bar. The reason I'm showing this and not the previous one is, in fact, if you see the previous one also, the same logic will hold this bar. Okay. So now let's proceed. No. So over the last 5-6 days, we had 3 opportunities where there was a trend change bar. Now let us concentrate on the first opportunity. I know we have covered this earlier, but you should revise this a bit because this is one of the strongest trades which comes from this whole logic. So what I need to do is, now on this bar, I mark the highs. Sorry. Let us increase this a bit more. So high is like 36,519. Somewhere around here, say. Just give me a second. Yeah, and the low is somewhere like this. So what I want you to focus on, that after the first trend bar, when this bar start closing below this, here you have a trend short with this high as your stop loss, correct? And when the prices again go back to this is where you get a second short. So this is one shot which gives you money. This is the second shot which gives you money. This is the third shot which gives you money. And each of these shots have a very, very small stop loss. See, basically the stop loss of this is focus around here. You will see the rates. The low is 450, high is 519. So whenever a bar closes below 450, you go short with a high of 520. So if you're in options, you're probably going to buy a 500, 500 put, right? and each and every time this option just bursts in price. So after some time it goes down even further, fine. So these rates are over. Now we concentrate on the second trend change bar, which is this one. Again we do the same thing. What we do is we mark the low of this bar and we mark the high of this bar, correct? Again focus here. You can see it on your charts also. The high is basically 674, low is 548, roughly 120 points. So this is obviously a buy. It goes up, comes down. Again here you will have a buy on this bar with a stop loss here. Again it goes up. This was a correction at the end of the day. What you do with this is your choice, but you get two trades which are very clear. Forget this. Let's concentrate on the next trend change bar. We had three, remember? We had here and we had here. Okay, what happens? This is your first shot, and also below the balance you get money. This place, when it comes down here, again you short. Again this has given you money. Third time you went up here. When it is going up here, I'm not shorting. I'm waiting for this line to break, right? It doesn't break, goes above. Now you will see this will become a support here. This is where the break comes, around 225. So if you short here with a stop loss here, you're almost flat till the end of the day. Next day also, if you notice this particular place, this is from where the selling came once again. Again from here the selling came. It is not going to this zone. And here also we have just closed within the zone on Bank Nifty. We have not yet crossed this. So this is how the trend chain bar plays. The same logic works on Nifty. This is point one. Point two is, I just wrote down the points, option selling. Okay. Let us delete the lines and go back to option selling as such. I will show it to you on Bank Nifty, but again, the same logic is applicable on Nifty. In the same way, the same logic will hold. Okay, the week started from 6th. Let us increase this, sorry. And this will give you a practical idea how basically this system works. Okay, early morning. First of all, the volatility. The market is extremely volatile, though the trend is bearish. If you're an option seller, you don't have a trade. Volatility turns to normal, you don't have a trade. Volatility turns, again, it's bearish, and volatility is quiet, right? You need to short when we are below the balance. So at this price, we are below the balance at 11 o'clock. At 11 o'clock, I'm going to sell a call option since we are bearish and volatility is quiet of this strike. This upper level on that day is like 36,684. So just above that is 36,700. So on 6th December at 11 o'clock or 11:10, I'm going to sell a 36,700 call. This is the 9th December expiry. This is 6th December. Forget this volume and stuff. I'm actually just focused on the price. So 6th December, say 11 o'clock. Let's see the 36,700 call price. Call price 36,700. 6 December 36,700. At 11 o'clock, at 11:10, where we are. Bank Nifty is trading at around 36,300. Okay, this is Monday, so obviously the option prices are high. So at 11:05, your option prices are like 391. So you're shorting this call, 36,700 call at, this is, sorry, doing something wrong. No, it's okay. 36,700 call. We are selling the 36,700 call at somewhere around 390. Now your question might be that what is my stop loss? Your stop loss is simply if you keep it at a day high, which is 673. It's higher, I know this, but can't help it. So what happens is I'm looking at some wrong date. This is 6 December. This call cannot go up. What I'm looking out here. And this rate is, yeah, 36,700. Bank Nifty 9 December expiry call 36,700. Select date 6 December. Okay, this date is 9 December. I'm sorry. That's why the problem started. Let's go to 6th December. Yes, 6th December. This part is 6th December. This is from morning, this is evening. So this is 6th December. At 11 o'clock, let us see. Yeah, 11:10 the call is quoting at 160 rupees. You can see the price on the right hand side. Okay. So this is quoting at 160 rupees. Forget this. And if I short at 160, say at 11 o'clock around 160, my stop loss will be the day high. Day high is here, something around 247. So if I short at 160 till 3, say 10, 320, it has come down to 67 rupees. So 160 to 67. So your price actually goes from here to here. And as you can see, there's no panic within the day that your call will go up. Okay, so this was your option selling trade. Let us come to the next day. Next day market jumped up. We covered in a video how options could have been bought, but let's cover selling now. Again, market is volatile, neutral, quiet. Within quiet, there is no trend. We are far above the upper band. If there is no trend, we'll be looking for options selling. Now, this is so far above the upper band, I will be holding this strike to sell, which is 35,900 put. So my date is 7th. Option type is put. 35,900 show chart. And the time when I'm selling this is when this is turning white. That is around 10:25. Let's see. At date is, no, this is 9th. I need the date of 7th. Yeah, this is 7th December. 7th December, I'm going to sell here when this volatility turns quiet. This volatility has turned quiet around 10:25. Okay. So at 10:25, yeah, here. The price is 142. So if you sell this put at 142, you will probably have a stop somewhere around here at 247, this high. So if you sell at 142 by 3 o'clock, it is down to 65. So again from 142 to 65, basically what you're doing is you're selling at 10:25 somewhere around here, and it is coming down to here. As you can also see, there is no panic in this particular put, and this red line which you see out here is basically the VWAP of that particular call. So you can use the VWAP as a stop loss also if you're confident. That's it. Let's proceed. This was 7th, next day is 8th. 8th, market jumps up above the upper level. Volatile, neutral, volatile, normal. This is where you get a chance. It's 11:05. Conservative, let us pick up this trade, say 36,600. So 8th December, 36,600 put. Let's change this. 8th December. This level is 36,600. Yeah. Okay, by the way, the software I'm using is basically iCharts. They charge around 5,500 per year, and they give you all the options, data and stuff. So 8 December, I'm selling only when the wall is turning quiet, that is white, right? So this is like 11:05. Let us see. 11:05. 11:05 is somewhere around here. It is like 70 bucks, and you can keep a stop loss probably of 153. Obviously, selling stop loss will be higher. So if you sell at 70, by 3 o'clock it is down to 27. Understand something, this option selling I'm showing basically not for very active traders, but I did receive quite a few responses from traders who are in offices. They are addicted to option selling, but they cannot see the market at every moment and they are a bit of panicked. But using these methods, you can just sell, give a stop loss, and wait how it goes. If you are feeling less confident, rather than selling naked, you can sell a credit spread. That if you are selling a particular put, you buy 200 points farther away put to guard. Your returns will obviously be low, but you will be safe in case of a massive move. Okay. But even if you are selling in this market, you need to use some kind of stop loss and keep it in the system. Best solution is if you keep the day high as your stop loss in the system. That should take care of everything. So this is 8th December. Now we come to 9th, which is basically the expiry day. So let us change this. Okay, let us see this first. Again, 9th December, we initially wait for this volatility to become white, that is to become white. Now, when I'm here, I'm at the balance. This particular indicator is negative, it is bearish. Okay. So if this is bearish at 11:05, I will go ahead and sell the call. A call of 37,500. So 37,500 call at 11 o'clock on 9th December. So let's change this to 9th. The strike I'm interested in 37,500 call. This is call. That is 37,500. 9 December 37,500 call. And let us see at what time. It is 11:05. 11:05 is somewhere around here. This is like, what price is this? Okay, 16 bucks. Expiry day, obviously everything is cheap, right? If you sell at 16, it goes up to maximum 22. By evening, it has gone to 0. So if you sell at 16, your stop loss will probably be somewhere around here at 64. This high I'm using as stop loss, right? Even if you use this high, it would be a bit, this particular high would be a bit dicey, but okay, 35. If I'm selling at 13, keep a stop loss of 35, goes to 0. So, and now we come to the next day, that is Friday, the last trading session. Okay, it opened out here, jumped around. We entered the quiet zone somewhere around here. So this zone is like, this time is like around 10:50, right? And since we are bearish, we are going to sell a call. At 10:50, this strike is 37,475, so 37,500 call. On the options chart, it will be the next expiry of 16th December, 37,500 call, right? 37,500 call. And we are selling this at somewhere around 10:50. Let's see. 9 December 10:50. 10:50 is here. No, I'm doing something wrong. Yeah. 16 December expiry, 37,500 call, 10th December, right? And the time I'm interested in is 10:50, around 11, say. It entered quite here. Yeah, 10:45, 10:50. So let's see at 10:45, 50. This was like at 176. Okay. So if you sell at 176, you will give a stop loss at somewhere around 238. Fine. You sit tight. The call actually comes down to 126. You have to use a stop loss some method. But if you are waiting till 330, at 203, your trade gets over. So if you wait for the whole day from 176 to 203, this will be your loss. But I think from 176, if it comes to 127, you are obviously modifying your stop loss by some means or taking some profit. So that's upon you. but this is how the entry levels actually work, right? This was the second topic I wanted to cover, and the last topic I'm going to cover is basically context. Context means nothing, but as you can see, I always have the last week levels plotted on my chart. So what it tells me is, so this is bearish and this has turned bullish, correct? When it has turned bullish, you will see something. This balance level was here, the upper level was here, the next day the lower level is here. So obviously this particular zone, this in the future, if Bank Nifty comes down, I will just, sorry, something like this to something like, say, this. So this zone is basically something where market will get a very strong support for the first time it sets. That is, I'm not saying it is going to go down here. But if it goes down to 36, 260 to 3600, this 200 points, if we have a fall till here, this is from where a bounce will come. This is number one. Number two, see the last 2 days. You say this. These levels are almost the same. It's around 36,800. So 36,800 is your next big support for next week. If the market falls, we are at like at 37, 240, 250. If the market goes to a sell off, 36,800 will be your first target on the downside. And from there, the market will bounce. So keep this context of the last week, last 5 days, continuously in your mind when you're trading the markets. Because we have covered each and every day, I was showing you an analysis that holds. But this context gives you a bigger picture. Same thing is applicable for Nifty too. This is Nifty. We are slowly going up, you can see the ranges, but what you see is there are confluence of ranges somewhere around here, this place to this place. This is mid level, this is lower level, this is lower level. So there's a lot of important zones out here. So this zone is like 17,300 to say 17,250. This 50-point vision, if the market falls, will act as a first major big support. So if you have a short the next day, you can continue or probably have a target of this on, wait, sorry, just give me a second. Yeah. So let us say visualize, hypothetical. Let's say on Monday market opens out here and starts selling off. You get a sell according to your indicators and levels and stuff. So if market is falling, how far will it fall? This is where it will fall. So if it comes here, I will get out of my shorts and I won't wait for more fall, because from here I will expect the market to bounce. So this context also you should keep in mind. So we covered three things today. Number one, the trend change bar. If you're an options buyer, that's your best bet. You will probably get 2-3 trades in a week, but the probability of the trade succeeding is very high. If you are an option seller, I showed you that in a week, if we did 5 trades and all 5 trades were correct. Obviously, the return on investment is much lesser than options buying, but your hit rate would be pretty high. So wait till the volatility becomes quiet, see the level, see the trend indicator, and do your option selling. Always keep a stop loss. Day high is your best bet. If you have a different method of using a stop loss, say 40% of the premium, 30% of the premium, and if you have a trading system kind of into place, kindly use that. You're most welcome. But this is basically the entry method. So this is the class for today. In the very future, in next week sometime, I will do an exhaustive class of half an hour on MFI, because I've shared the MFI indicator. I've showed you how to trade. Keep watching that. Sometime in the middle of next week, I will do a half an hour session on how MFI should be traded with the whole scheme, right? So as of now, concentrate on what I've shown. We'll do that later. And as usual, these snippets will continue from time to time on how you can improve. Thank you for watching.